The stock market successfully shook off a pandemic and continues to climb as the economy reopens. But with inflation fears out there, what should we expect for the rest of 2021? That's the subject of today's Fastest 4 Minutes in Finance. Hello once again, I'm Scott Inman. We are economic forecasting in today's Fastest 4. We remind our clients all the time that stocks are long-term investments. You don't want to buy and sell based on short-term movement in the market. That being said, we do always want to know where we are headed. The S&P 500 has rallied nearly 90% off the March 2020 low. But since mid-April, it has been choppy and generally has moved sideways. And that's not that uncommon when you take a look at historically how things go. But history would also tell us this will be a good year overall. Take a look at this chart from LPL Research. It shows the first 2 years of every bull market since 1950. Remember, a bull market is defined loosely as when the market rises by 20% or more, following at least a 20% decline. It's used to identify a period of economic expansion. By that definition, we just started year 2 of a bull market. Historically, the second year of a bull market has never been negative, and on average, it's up 12.7%. It is not, though, without volatility. Take a look at those numbers. The average max drawdown in year 2 of a bull market is minus 9.8%. Now keep in mind, we're defining the market here as the S&P 500. That is not the overall market. It is only an index that cannot be directly invested into. As of this recording, the S&P 500 index is up about 7% since the beginning of year 2. So you could argue that we've already gotten a lot of the gains we should expect to get in year 2 of our bull market. So here's where the forecasting comes in. Brian Westbury is the chief economist for First Trust Advisors, and he's a guy we listen to, and he believes there are a lot of reasons to think the market could be higher by the end of the year. He says there's still a lot of stimulus money that has not circulated into the economy. COVID vaccinations continue to go up, and COVID cases continue to go down, indicating more reopening kick to come. He is forecasting 7 million new jobs and GDP growth of 7 to 8% by the end of the year. He believes corporate profits will grow by 25 to 30% this year. Now, one of the headwinds to higher markets is stock valuations. They are higher than average. But if the economy continues to boom, valuations on stocks could be more attractive. And Westbury believes the S&P 500 is worth 5,100 based on Q4 2020 earnings. That's about 21% higher than now. And he doesn't think we will necessarily finish the year that high, but if earnings growth continues, there's reason to be optimistic that we finish the year higher than we are right now. Just not without some bumps along the way. Thanks for watching. Want more content like this delivered to your inbox weekly? Visit fastest4.com to learn more.